Chris Versace is the CIO at Tematica Research. He is also the head of the Street Pro portfolio, and he joins me now for a one-on-one conversation here on the trading floor of the New York Stock Exchange on Fed Day nonetheless.
Fed Day.
Mr. Versace, happy Fed Day.
Happy Fed Day. Did you celebrate today?
Well, yes, because I told the producers the one thing I'd like to do to celebrate is get Chris Versace here for an interview, which means the party has started.
Okay,
Thank you for joining us.
All right,
So we may be in a celebratory mood. The market reaction, however, a bit muted. What did you make of what we've heard from the FOMC and the early market reaction?
Well, coming into this meeting, we thought there was a real risk of a buy the rumors, sell the news type of event. I say that because the market, if you look at the S&P 500, the NASDAQ, tremendous run over the last several weeks as the market really expected not 2, not 4, but a total of 6 potential rate cuts by the end of 2026. Now, I can understand that given some of the softening in the employment data that we've seen of late, as well as the big revision that we got. But my view was that if you look at some of the more recent economic data, the rolling GDP forecast by the Atlanta Fed, the New York Fed nowcast, as well as the inflation data, that the market was out over its skis, or to use my favorite word that I know you love, filled with hopium.
I knew that was coming.
All right, so I was a little concerned that, maybe the Fed would telegraph a little more, but not as much. So what did we get? The Fed now potentially sees the September rate cut that they delivered, plus 2 more, but only 1 rate cut still in 2026, so a total of 4. As I joked with you earlier, 4 is not 6. And I think that's what we're seeing kind of take hold with the market moving lower on this news.
How do you view the increase, what sounds to me to be a bit of an increase in priority for the FOMC on the job side of its dual mandate here in 2025? Certainly something we heard Chairman Powell talk about again earlier today.
I think it makes sense. I mean, look, they have a dual mandate, and these things can shift over time. And I think if we were to look, coming out of the pandemic, clearly it was inflation, not so much jobs. And now that teeter-totter, if you will, has kind of shifted a little bit. And again, perfectly understandable given what we've seen of late. Now, how much of that is due to tariffs, how much of that is due to immigration, hard to say. But we know that looking at the data, there's been a lot less jobs added in the last 15 months than we previously would have thought. So I think it's fair to say that they are front-loading with potentially 3 rate cuts, right? September, October, and then December. 2026, we don't know yet. At some point there could be one, but again, the Fed's going to remain data dependent.
What do you think, to the point of being data dependent, are the most important pieces of data from the last FOMC meeting to this one that you think the voting members had to take into consideration?
Well, I think, like we just talked about, all that employment data, but I think it's still the inflation data that really matters, because what we're seeing, and there's a lot of different metrics out there, there's, the PCE, CPI, PPI, but I also like to sprinkle in a little of the ISM price data. And that, if we look at a trailing 3-month perspective on that, those figures have continued to climb. Here's the thing, we know that prices are generally higher because of tariffs compared to earlier in the year. Companies are restocking inventories at higher levels. So their odds are we're going to see inflation tick a little higher before it gets back on path moving lower sometime maybe next year.
Yeah. What would be your expectations in terms of key catalysts or crucial data points to watch, knowing we do have 2 FOMC meetings left? I think we have October and December, if I'm not mistaken.
That is correct, and I'm going to trot out the usual list of economic data points. Yeah. So for me, it's going to be the ISM data, it's going to be the flash PMI data as well. Those are chock full of insights for manufacturing and services. Of course, the inflation data and the jobs data, but not just the official employment report from the Bureau of Labor Statistics. Obviously, there's some concerns about that data, so we have to triangulate. So what does ADP say? What does the Challenger Job Cuts report say? Because at the very bottom of that report, they talk about hiring expectations as well, and also on the employment front, the ISM data, because again, they give you new orders, export orders, backlog, employment, a lot of good stuff.
Yeah, lots of good stuff for people like us. Yeah, of course. We love this stuff.
Nerds like us.
Nerds like us, we love this stuff. Fascinating politics behind the Fed these days, and I'm really curious your thoughts because this was something Chairman Powell was asked about moments ago down in Washington.
First question.
Largely punted, surprise, surprise, a non-answer answer, but Stephen Meehan, the only FOMC member who, he just became official yesterday, in theory?
Yeah, he was sworn in, or approved, I guess, Monday night, straight to D.C. Wait, he was in D.C.
He was in it? Well, yeah, straight to the other side of
Correct.
D.C., I suppose.
The other building.
He took an Uber to the other building. The only member here in favor of 50 basis point cut. What, if anything, does that tell you? Does that say more about his outlier view or more about the fact that the rest of the committee now seems, which was not the case last time, to be, again, more or less on the same page?
Yeah, so it's an interesting question, right? Because we know who's backing this newbie, right? And so I believe President Trump said, I expect a big cut. And so it's not surprising that his lackey kind of put that in. But as far as the others, I have to say I was a little surprised because I think that we saw Waller and others out there, kind of leaning more towards the Fed doing more sooner. Now, maybe the compromise is bumping up from 2 rate cuts in 2025 to 3 for a total of 75, potentially. Maybe they're happy with that. We'll see. But again, need more data.
Yeah. What did you make of the appeals court decision to keep Lisa Cook in her current position? And on top of the fact, we continue to learn more information, largely about the heart of the supposed mortgage fraud allegations, and maybe some questions about how much water it actually holds.
I will say this. I believe there's some chatter out there that Scott Bessent did the same thing that Cook was accused of. And, if we really want to do something fair, how about we take the cabinet and we take all of Congress and examine their records and see, who is pristine and who is not.
All things being fair.
But remember with Cook, though, this happened before she became a Fed governor. Right. And there seems to be some conflict in different forms. Some potentially saying it was a primary residence, others saying vacation home. I think it's all going to come out in the wash, as they say. But based on what I've seen, I don't think she's going anywhere.
Does politics matter more? Does it play more of a role in economic data today than it did previously? And if so, what does that mean?
So when you've got a president coming out and saying, I don't like that data, bad data, something along those lines, or even, I forget the person's name, someone in the administration was asked about the response to the weak August employment report. And the response was, Lutnick, the response was, President Trump's economy begins in January. I'm like, okay. So when you hear stuff like that, it's a little worrisome about the quality of the data. I mean, you get a bad report and you fire the head of the BLS. I mean, we'll see if there's, where there's smoke, there's fire on that with any restatements that we get going forward or more accurate data. But it is a little worrisome because we have to trust the data. And if all of a sudden it's being, dispersions are being cast upon it, it makes that job much harder.
Speaking of reports, this is the first time I've spoken with you since this happened, but I am curious your take. The suggestion from the president to do away with quarterly earnings reports, scale these things back. Your thoughts?
So I have 2 thoughts on that. One is someone who has to sit there and listen to dozens upon dozens of earnings calls every quarter. Selfishly, I could say, this wouldn't be a bad thing.
There you go.
But as I joke, kind of like Tron fights for the user, I fight for the investor. If we were to dial that back, we have a lot less transparency, a lot less information. I do think that there's probably a compromise, which is instead of every 3 months, maybe every 4 months. But I would also say that if we did do that, I would like to see more companies talk and publish more usable metrics about their business on a regular basis. What am I talking about here? Costco, for example, they release monthly sales reports. They also give you adjusted figures, pulling out the impact of foreign exchange and gas. So you get a true sense of the business. If more companies did that, Taiwan Semiconductor, they report monthly sales figures. Buckle does it. Buckle, tiny little retailer, right? If these companies can do it, others can too.
Chris Versace is the CIO at Tematica Research, also head of the Street Pro portfolio, a very good friend of mine, joining me here on Fed Day. Chris, thank you as always. Good to have you.
Love to do it.